Hello traders, Gary Wagner here. It is 11:42 in Honolulu and 5:42 in New York on Thursday, 30th day of June 2022, and this is the daily report for gold and silver. Today, the government released its most recent data for inflation. The PCE for May came out today, indicating that inflation remains elevated at 6.3%. However, the core PCE, which strips out energy and food costs, did have a slight downtick from 4.9% to 4.7%. This report caused a knee-jerk reaction in gold pricing. We'll look at that through the eyes of a 5-minute chart, but currently we have gold futures down $8.50 at $1,808, a decline of roughly 0.5%. That decline occurred concurrently with dollar weakness. The dollar declined by approximately 0.3% and is currently fixed at 104.50. Gold certainly contained extreme volatility this morning. Immediately after the release of the PCE price index, we saw market participants actively bidding the precious metal higher, taking gold from its opening price at around $1,803 up to the first of two tops at $1,826, and that would be 15 minutes after the open at 8:30 or 8:45. It did hit a high price of $1,826.50 at 9 o'clock a.m. in New York, and then took a much slower, methodical decline over the next hour and a half to trade back to approximately 106, and this low here at 105.10. We did send out a trade alert today recommending that you buy gold August futures on a limit of 1806. That order was filled, stops at 1896, but currently we do have gold, as I said, at 1808, and that is still showing a decline today of $9.50. On today's video report, I do want to take a look at gold pricing on a technical basis based on a shorter term and longer term view of the market using a daily and weekly chart. Of course, this first chart is a daily chart of the continuous futures contract. We can see that yesterday, although we closed above this support trend line that we've created from a series of lows here as well as here, today we opened and closed substantially under that. On a very short-term basis, there is technical chart damage there. However, we placed our stop at 1796 because we believe that there should be some support based on a couple of lows that occur just below 1800 at about 1797. If in fact we find support in this particular price point and move higher, the first level of resistance we could encounter will not occur till about 1831, and major resistance would occur at a very, very narrow range between 1849, that is the 50-day moving average, and the 200-day moving average just below it at $1,844. The last chart that we do want to look at on today's show is a much more long-term forecast and view based upon weekly candlesticks. We're looking at the major support trend line that we have created by fixing two lows. The first one occurs in the middle of August with gold trading at approximately $1,679, and the second low occurring this May when gold traded to a low of $1,788. When we view the chart based on these two lows, what we see is that today's low definitively comes just at this trend line, creating a case for long-term support. Resistance on a longer-term basis would occur at the same price point initially, 1830. However, we wouldn't get major resistance till about 1875. That is based on these series of tops here, as well as this top that came in approximately the middle of November last year. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.